Morning, everyone. Hope you are well. It's Wednesday. Welcome to the proptrade.com. This is our daily video on everything that's moving the market. This morning, in about 10 minutes' time, hopefully, as you can see there on the left-hand side, right-hand side of me here, is UK CPI. It's probably the main economic event of the day. Later on, we got the official crude and inventories out of the US, and we had that massive build last week, which hasn't really moved oil out of that range at 67 US oil, 67 to 69 we went up to, but so we're stuck in that range. As far as the UK is concerned, 3.7% maybe what's was talked about last month. In May, I should say. Sorry, 3.4% is expected for the June reading. The core number may be a little bit spicier, but we shall see. We'll see the PPI out of the US later on this afternoon. So remember, yesterday's headline CPI data out of the US was hotter than expected, but the key core number was actually cooler for the 5th month in a row. So there's mixed messages there. There's certainly some sort of impact from some sort of tariff impact somewhere, whether it's in goods or services, difficult to tell at the moment. Obviously, the main rack of tariffs haven't started to bite. We had Indonesia yesterday agreeing, I think, a 16% deal. Was it 16%? Let me just double check that. I think it was something like that. But I mean, there's more countries coming on. Obviously, the big ones: Japan, India, obviously the EU, very much, all being pushed out again from this 9th of July deadline that the president had out to Labour Day. So we'll see what happens. So I say inflation 3.4% in the UK headline number. We've got the Chancellor of the Exchequer yesterday in the UK, just last night, had a major speech at the Mansion House, which is the major event in the City of London, and she was talking there about UK citizens investing more in shares. She was sort of floated the idea of she didn't talk anything about her taxes that looked like will have to rise in her autumn budget. She was encouraging people sort of to buying shares, and also looking at some of the ring fences, some of the rules about the banks in London in particular. And she was suggesting that might be getting relaxed. It was one of those elements of their manifesto where they were quite keen on not being seen to be too cozying up to the City of London, but that seems to have mellowed in the year they've been in office. Some changes to savings guidelines as well. She was talking about that yesterday. But yeah, obviously prices going up. Remember, the Bank of England have talked about inflation peaking at about 3.7, 3.8% in the UK in the summer. So we could see a rise today. Anywhere in that sort of July to September window. So obviously the June data is coming in a few minutes. If we just have a quick look at what the markets are doing before this data drops. Actually, let me just go back to show you that was yesterday. That's the core number the core 0.21% for the month. For PPI for US later on, and the headline 0.21% as well. If you just look at this issue that the UK has with inflation, it's a good indicator for what most of the central banks are struggling with at the moment. This idea that inflation has started to show its hand again. As you can see here, it's coming hotter than expected. We take the forecast off here. You can see it's coming hotter than expected the last 2 or 3 months, certainly the last 2 months. But the trend, as you can see here, from the third quarter of 2024 started to drift back up. Remember, we did get back. We were under 2% at one point this time last year, July 2024. So we've risen quite significantly, and obviously the opposition political parties were making most of that, but a lot of it again, you could argue it's not really the impact of tariffs in the UK, simply because they've got this framework agreement with the US, and their trade, certainly on goods, is very much in balance. It's the services sector that there's a huge amount of business with the United States. So anyway, inflation driven by hotter earnings, jobs numbers that are holding up, especially the bonuses here in the UK, is starting to push through on this this inflation number. So we'll see what that looks like in 5 minutes time. So a quick run through the charts. This was last night. So we only had one trade last night, and it was long pound yen, which has hit its first target this morning. I've closed it all out completely for a 50 pip gain from last night on the guppy, the pound yen. And that was to do obviously with this, the unexpectedness of this particular data coming now. As I see, oh, actually, let's make a wee bit smaller. There we are. To the chart's a wee bit bigger, hopefully there. So that's pound up against the yen, come down in the last hour or so. For, euro pound has been going in the opposite direction. If we got to the daily time frame, we've moved up to sort of April highs. You can see this is a high we got to in January 2024 as well. And it declined all the way down through 2024 and 2025 euro pound, but we're up here at 86.70. Euro's having a strong, a better week against sterling. Sterling's sort of cooling off somewhat. My MACD charts, but you can see here in the MACD charts, trend remains very much set. So euro very much up against the faltering pound, against the dollar. Obviously, the big strong trend is cooling, as we've mentioned earlier in the week, and that was the big move we had on Friday as we went under the 50-day moving average. You mentioned this again yesterday, and significantly under the 135 area. So initial short, small position that was triggered here on the 8th as it went under the 20-day moving average on this this strategy here. And remember the crossing strategy, the 5, the 9. The 5 is the orange, the 9 is the green, and the red is the 21 exponential moving averages. We need them all to be in line. We need them all to have crossed. So we get here on this day here, actually, we get all three crossing at once. Doesn't often happen, but that's the cross on the 8th. You were short from here. Your stop loss would have been, it should have really been up there at the top of the turn, but you could have had it round about where this these 2-day highs were, these intraday highs, and now we've just scrolled our trailed our stop loss down as the position has moved, and then we added extra here on Friday on the big candle down as it went under the 50, and then interestingly strong move under the 50 here Monday, Tuesday. So we are now having breached 135 on on Friday. We are now under the key next big support area 134 at the moment. See what this inflation data does to that. But as you can see, there's a lot of fresh air for another 200 pips to the downside for sterling to 132. Technically, there's a bit of a resistance through here, as you might expect at 133, but 132 is the next floor for this pair for cable. So there we are. Big trigger was there on the 4th on the MACD cross. The histogram went red on the 7th. We crossed under the 20. It was all adding up on the 8th, and down we go, and we're still short sterling against the dollar. Let's just zoom this in onto the 5-minute time frame for the data that's about to pop. Actually, let's do the 2-minute time frame. So if you've got a standard account with us, you've not been allowed to trade it up until there, but you're being long there, so you'd have closed out and bagged some profits on that trend here on the 2-minute big candle here at 6:32. So let's have a quick look at the calendar. So it's still a minute to go. We're still moving up. So if you have got a pro account, you can trade the news. Obviously, that's it's not going to bother you because we're still moving. But there we look like we might be recouping to the key 134 level. What's that? Oh dear. I'll have to reinstall those MACDs, I think. Get rid of. Come back to that in a minute. So it looks like 134. Looks somewhat inevitable at 133.99.3, doesn't it? But it doesn't always mean that that's the case just because we're up that high. But So sterling's bounced back, as you see we saw in the higher time frame, and it was relatively weak. If we just, I don't know if we've got time to go to the FTSE, because obviously the cash market doesn't open for best part of another hour, but the I might see the response in the derivatives market, or is it actually up? Yes, it is actually up. There we are. So the FTSE, as the data's dropped now, has moved down into the 8,009. Oh, actually, where have we gone? 8,920 zone. See the quite hefty spread there on that short minute time frame. Let's go up to the 5-minute time frame. So the low from this morning has been taken out, as you might expect on the major news for the FTSE. Could have taken out the high, of course, of the day, but there we are. We've taken out and we've pushed a new low of the day, and it happens to be round about that 8,920 on the FTSE. If we just go back to the just sterling. That's continued to move up, so back through 134, and that looked maybe our support for the day. We went under 134 back here yesterday afternoon. It's a decent sort of run. Tested it here in the Asian session earlier this morning. We've put in a low overnight, or that was yesterday, wasn't it? Down here last night, yeah, as roundabout close 133.75 is our low for the day. So far in the Asian session today, we're on 133.82, and we're now currently over 134. So as the UK traders get to their desks, I mean, most of them will be at the desk for the CPI. We've lifted sterling over 130. And the reason for that is that we have got that hotter reading for inflation, 3.6%. That won't be good news for the government, for consumers, for businesses. Consumer price inflation obviously has an impact on businesses, but it's a consumer price inflation, 3.6%. If we have a look at the core reading back on our calendar, I'll just have to refresh this because it doesn't keep it, very annoyingly, and it's got all these other countries. With all due respect, I'm not interested in them this morning. So core is much hotter as well. So we've got that flip here in the UK compared to the US. The core has gone up relatively significantly. Has gone up significantly, not relatively significant. Has gone up significantly. 0.4 of 1% from 0.2 of 1%. The headline 3.7 from 3.6. Yeah, obviously they've rounded it up here on this calendar. See how they're excuse me. Forex Factory are recording it as 3.6 and investing.com at 3.7. So it's probably 3.6, 498 or something. It's unusual for the forex counter to get it wrong. So let's just see if I can see the data, the actual long reading. Yeah, 3.7 versus 3.5 for the core services, 4.7%. So the services element is coming at 4.7%. Yeah, so it's coming much higher at the 3.6 for the core. So I wonder why they've investing.com rounded that up as much as or Forex have not rounded it up. Anyway, we'll come back to that in a minute. But anyway, it's hotter than expected, and the reaction, as you might expect, is a stronger sterling. So that break of 134. So as we go forward, we're 10 pips north of 134. That will become a key. If we hold this, that will become a key support level going forward in the day. The other level will be these lows we've seen in the Asian session around this 133, 84, 75. So there's 10 pip range down here for sterling going forward today for you scalpers. But whether we recoup, if we just go back to the higher time frames, the trend, as we saw on the daily, is continuing to move down. So whether we change this, having got back to 134, would be questionable. Obviously, the PPI data for the US coming out later may obviously influence this pair, but as you can see, the RSI is back to 50. The MACD here is still looking positive, or is looking positive for sterling this morning, for the last few hours, as it's gone longer here on the hourly time frame. But the higher time frame, that rollover, as we saw on the daily chart, is very much set and very much in play from this attempt at 138 at the end of June. So it's been a give back time for sterling against dollar for these first 2 weeks of July. And we're in this key, as we saw on the daily time frame, is key 134 area. So it's once, twice, 3 times, 4 times. So there's that fresh air down to 132 we talked about earlier, with a pause at 133. So the trend remains set for you higher time frame sterling traders to the downside. As I say, for you scalpers intraday, we've got a bid today. It's starting to fade here in the second candle. So we struggled at 134.10 basically is our resistance today, 134.10. We actually got to 134.12.7, but you know, anything over 134.10 is a resistance area, as you can see there, going back to this decline from yesterday afternoon's decline. So that would have given up our pound, excuse me, our pound Swissy, sorry, our pound yen. Actually hasn't given back as much as one would have thought. So that was our obviously we got to our target here. We got through it again. We went actually higher earlier this morning. There's the data at 7 o'clock, and obviously interestingly fading at our target at whatever it was, 199 something. So yeah, euro will probably have a legged down, sterling's up against there, so we're up back away from this 2024 high and decline. We've been as low as 86.62, but sort of bouncing a wee bit at the moment there into that 5-minute chart through here, this zone here, 86.68 for euro pound. So owner occupier costs going up quite significantly here. I'm just looking at a chart that's on actually Forex Live before they changed their name. Has come overall as topped out and rolled over. So that's something the government won't want to see here in the UK. A hotter reading for inflation. Interestingly, the main news channels in the UK are really saying it's 3.6%. So they're taking the Forex factory reading of 3.6%. But the point is, obviously, it's a wee bit higher than that. If other calendars are reporting at 3.7%, but I'm looking at the BBC and Sky News are both reporting inflation has risen to 3.6% in the year to June from 3.4 in May. As I say, the Bank of England did talk about 3.7 being the peak in this window, July-September. So we still have some more pain to come here in the UK. Some comments about Rachel Reeves' speech last night. I talked about the idea around savings and share investments and what have you. But yeah, the core number is obviously the key problem you could argue for, or you would argue for the UK, because the core number. Let's go back to our calendar here. The core number has actually gone up as well, and not only gone up, it's doubled from what it was in May. So there's going to be some more pain to come over the summer for UK buyers, UK consumers, and the government as well. 3.6%, core 3.7%. Yeah, so 3.6 for the headline. Actually, I was reading the wrong number there, wasn't I? Sorry, I was reading this one here. So it's 3.6 on here as well. So I'll correct myself there. 3.6%. For the CPI number. The other one I always look at, and it's fallen out of favour, is the retail price index, the RPI number. That's now back to 4.4%. RPI used to be the main measure of inflation in the UK. It takes into account things like it gives more weight into things like rent and to wage negotiations and wage settlements. and so that's hotter. Obviously, significantly hotter, to over twice what the central bank are looking to get the CPI down to 2%. But it's only gone up by one tick of 1% rather than the consumer number, but it's still hot at 4.4%. I don't think we've got it on the Forex Factory calendar to show you the chart on that, but it's obviously it's got a similar tweak, except the numbers are higher. This trend is going higher. Is that the June? No, we haven't got the June one yet. Give it updates the 3.6. Oh, we have got the June. There we are. So it's come in hotter than expected. Certainly the last 3 months, if not 4 or 5 months, you could argue. So again, it's hotter here in the UK, and the core is also hotter, unlike what we got yesterday in both Canada and the US. Actually, Canada's was up a tad, but the core was a bit cooler here in Canada yesterday also. So let's have a quick look at the rest of the charts, and I'll let you get on with the rest of your day. So sterling has had a lift from let's just go back to the majors. So sterling has had a lift. It's back over 134, but the higher time frames remains pressured against the dollar over the last few days. So we've had this lift. Let's go back to use the default hourly time frame. The trend remains to the downside. I say we've had a bit of a lift on the data, back over 134, but can we hold 134 for the rest of the day? That's what I'd be looking at, and as the meat of the trading day starts here in London and Frankfurt. Markets open in 50 minutes. Traders are at the desk already for this data. Obviously, it's lifted sterling, so pressure remains on the UK government, particularly the UK Chancellor, and see what Andrew Bailey has to say later on in the week. Elsewhere overnight, there's not a lot been going on overnight. There's the you see that's the one bull date, so there's very little data. We are in the middle of winter as far as the Kiwis are concerned, middle of summer here in the northern hemisphere. So very little data overnight. There's no particular market moving news. Obviously, the tariff story continues to rattle. The pressure on Powell continues to rattle out of Washington. There's there's that news yesterday from Nvidia about their cut down chip is now being allowed to be sold in China as the head of Nvidia visits China today. I think he's speaking at a big conference today. And their stocks are going gangbuster. Yesterday, stock markets were down, quite mixed actually. The Dow lost over 400 points, nearly 1% at 44,000. We were short. We'll go through all the trades we've got as well at the moment. The S&P was down 24 points at 6243, and the Nasdaq held on to gains thanks to Nvidia in particular. That was up over 4%. Oracle was up 4.2% at 20,677 on the boards, but everything was red. Most things were red yesterday. We had those strong bank numbers from Citi and JP Morgan. Both of them beat on the top line and the bottom line. And then, surprise, surprise, not unusual in these days, we had quite a significant miss from Wells Fargo, particularly on their fixed income side and their trading side, and also their M&A side. So mixed figures, which is why we sort of seen this market sort of rolling over in a tad. We'll have a look at those in a minute. So there's sterling to the downside. Aussie, I say there's not a great deal of data overnight. Aussie and the Kiwi continue to hold up against the dollar, but we've seen this similar sort of roll down from previous highs against the dollar. So the dollar's come back a wee bit, but we are still holding the key. There we are, a key 65 level for the Aussie. If we go up to the higher time frame, you see that trend. Oops. That trend is very much still on. However, first caveat: yesterday we went through the 20-day moving average. The Aussie 50 is playing more of a significant role. See if that breaches, and obviously before that we've got this dot 65. So watch 65 as a support if you're trading the Australian dollar. If this holds, we can easily go back to these recent highs, back just shy of 66. But we've turned down from 66 twice here at the beginning of the month, here in the middle of the month, and into dot 65. So can this hold? Can the 50-day moving? Obviously, this trend starts to flatten out. The 50 comes up, the prices come down to it. So it could be tested quite in the not too distant future. Just do the Kiwi, or we're down in the Antipodeans at 59.60. So we've struggled to hold the 60 level. Looked like it was going to be okay, but we breached here on Monday. And then we were down again yesterday, as was the Aussie, as we said earlier, and we are now at 59, where we're trading now 59.50. Key round number and support area there for the Kiwi. So you can see that on a daily time frame. Again, if this breaches, a quick move down to 59 can't be ruled out. Last time we spiked it on an intraday basis, and then we had a strong rally to 61, which is another one, a bit like the Aussie. We couldn't hold 61, now we've come back down. So really range bound, not range bound, but we're sort of looping through. It's summer doldrums sort of volumes are low as well, but watch that break of 59.50. That's what I'd be looking at, and then see if we get a test of 59, and we might even go under. The closing day candle back here in May took us to 58.50, so still 100 points away from now, but again, relatively Aussie, the Kiwi holding up, but dollar coming back at the second half of July. CAD is back over 137. Dollar CAD back over 137 this morning. So that recovery continues. There we are. That was last week. Again, good day on Friday for the dollar. Good day yesterday. Dollar against the CAD on the that CPI data mix we had. 50-day moving average, our next upside target at 137.38 for dollar CAD. But as you can see, that runs through this high from the 23rd, and that was a test of the 50-day as well. So perhaps you can see a test of the 50 period moving average in the not too distant future for dollar CAD as it continues to recover. Swissy, interesting, it's got back over 80, so over the key 80 level here on the Swiss franc, and again the gradual recovery continues, but we still remain capped, having tested it yesterday by the 21 EMA, so we're still capped there yesterday. Good day for the dollar, yes, on the back of the inflation data. I think it was the core number being for this fifth consecutive month cooler, actually going backwards, even though the headline went up. So it's still showing the headline. Sorry, the core is like remediate a bit, but the headlines obviously perhaps raising the certainly at least the discussion in the July meeting for the Fed for some possible rate cuts or no rate cuts, simply because inflation is still ticking out. So it's still a two-edged sword as ever, but doesn't look like the Fed will be doing anything in the future unless there's a shock sacking of Powell by Trump, and never rule anything out with the potential chaos that comes out of the White House. So Swiss franc up, yen 148.70. That strong recovery for the dollar is, and the weakness of the yen is not exaggerated, but to demonstrate here really clearly more so than other dollar pairs. So 150 is starting to come into focus. We're trading at 148.75. Another, you see, big candle yesterday for the dollar on the back of that inflation data. So the breach of 145 is held. We broke away from the next resistance at 146 through here, and we've had three strong candles. So we may see a bit of cooling today, but 150 might be a stretch too far. But dollar's coming back, and the yen continues to weaken during July. There you go. See that line we put on the other day, didn't we? Kiwi done. Aussie, Euro. We haven't actually talked about the Euro, have we? But there we are. That was that breach of the 20-day moving average. That was triggered a short yesterday on this strategy. You can see that one there. You can see we've been rolling over, rolling top. Not very nice setup. It's usually quite negative. The 5 and the 9 crossed actually here on the 10th. We finally breached the 21. Or we breached the 21 EMA yesterday. That would have triggered a short on this strategy on that end of day basis. There, right on the 116 level itself. So 116, will it hold? Will it not? It was tested on the way up and then burst through. So we might slip down. As you said yesterday, the key support areas below that is the first fib level here at 115.20, and then the 50-day, which currently sits at 114.85, so under the 115 area, but they're all coming to coalesce around the 115 area. If we I'm going to do this a bit better. There we are. Oh, yeah, see that a bit better. There's that fib level. That's from this last big leg up we had. This big leg, that's that last leg up. There's that first key fib level at 15.20. There's the 15 and there's the 50. So big sort of collection, coalescence, a coalescence of support around 115 for euros. So that's having triggered short yesterday. We'll see where that goes from there on the euro dollar chart. Elsewhere, crypto, Bitcoin currently trading at 117, just shy of 118,000. So we're back, having shook out, got a bit of a shakeout yesterday, and the intraday spike we got on Monday to 123,000. Some profit taking after this nice run and this breakout we saw last week. So simply some profit taking. That remains a bid. Obviously, I'd like to see that above this 112,000 now. This channel here now. This is going to hold. So we could quite easily, obviously, we could do anything with the crypto market. But there's the 20-day moving average just starting to move over the 112 area. So that's the next our support to the downside. This rolls over gives up quite a bit of this run, but that's quite a decent run, isn't it? There's that 161 area we ran through. So crypto remains bid. What more can I say? Energies, oil 66.80. So again, sideways action. Watch the official inventories. Tonight, I didn't actually see the private inventories yesterday. Where are we? APIs. Oh, there's a huge, it's a monumental build of 19 million barrels for the private API inventory. So the official inventory that's come out later today should show similar build. Remember, we had that massive 7 million build as well in the where are we? It's today, isn't it? US refinery. Inventories. Where's the inventories gone? Oh, here we are. So we had that big 7 million barrel build as well in the official inventory, the EIA inventory, these ones here. We are expecting a drawdown, but we were expecting a drawdown in the API. And these are unlike non-farm payroll and NFP and the AFP numbers. These are quite closely correlated, so we could expect a big build in the official inventories today, which is why we were down yesterday and why we, at the bottom of this channel we're under that 67 again. So we could even go to test the 50-day moving average here on the oil chart. There we are. That was yesterday's mega candle. So under $67 for the first time in a few days for best part of a week. For the oil market, but again, obviously, the geopolitical machinations on that are still in play, but we're in the summer in a consolidation zone between the 67 and 70 to the upside for oil. Don't rule out that 65 floor that we got to earlier in June as well. So still sideways action on the oil market. And we've done the forex, done the energies. We'll come to the indexes. So we were, I think these are positions that are open. So that was stopped out, I think, wasn't it? I closed that one out. Did I? I can't remember what I did. Did I raise the stop loss? I can't remember. Well, we'll have to look, check what we said on our Discord group. Is our Discord group is where I put the positions. Here we are. Yesterday that was closed out Euro New Zealand. That hit target Aussie CAD, and that was fully closed. These faster ones, I'm going to start closing them rather than doing 50-50. So that was SPX is out of the money, but it remains open. Stop loss to 6191. The US 30-50 position closed at 45. Stop loss low to 44. 326. So it looks like that's been hit, doesn't it? 3, is that where the stop loss was? 3, there we are, 3. Yeah, so that's reversed to it overnight. So our entry was, where's the entry on this one? Can't remember. This wasn't. This is the 14th. We didn't enter it. Did we enter this one on the 14th? But that was the target, wasn't it? We got it down here somewhere. I think I must have moved this line by mistake. But that's certainly. What did that say? That was 43, 329. That's the. Sorry, just bear with me a sec. Sorry, so let's come here. There we are. 44326. I can't remember if we were short or I can't remember. We were short that. Anyway, it looks like it's been taken out, doesn't it? 44326. So where's 443? See that one? Stop loss 44326. Yeah, so that's a stop loss, which is this one, wasn't it? Yeah, so it's I can't remember. Well, we were short this, weren't we? Of course we were. Yes, sorry. Let me have a look. That hourly chart makes it easier to look. There we are. So that's right. We were short this one on Monday. That's right. So short, and we pulled the stop loss down to here now. That's right. So and it went through target yesterday. Right. So there we are. That's now makes sense. So that stop loss is still there, and 50% of that is still open. I might pull this down whilst I've got you here. Now, clicking the 4-hour. Stop loss is actually under the 50, close to the 20. Let's pull it down to the lock some more profit in to the 20 period on the 4-hour time frame, because I'm not going to be watching this much at all today. So let's profit on that short Dow position. What else was open? Stop loss raised to 61.91 on the SPX. That was. Oh, that's right. I was long the SPX, and that's right. I was mixed, and short the Dow. So the Dow was in the money. Stop loss has pulled up, so you can see it's coming down towards us now. I might close this one out. It's out of the money at the moment, so I might close that one out as it's through. Sort of stuck through a 4-hour sort of congestion zone at the moment. See how that goes for the rest of the day, but that's out of the money at the moment. The SPX 500. That's the only other position that was open. And then the other one from last night, I say I've fully closed it out. The pound yen that hit target. We got 50 pips off the table of that this morning on the back of or ahead of the UK CPI data, which is coming hotter than expected. If we just go back to the one we're just talking about, just to demonstrate before we leave. The movement for sterling. So the spike to our target earlier today has come back down. We went back higher in this hour, but if we look at the 5 minutes, which is what we were looking at, weren't we? There's the lift on the data, and then we've come back down, faded that data. So classic fade most of the gain, and we're back to sort of more or less sort of sideways here, a little bit better than we were ahead of the data, but not much ahead of the cash open in Europe and London. So there we go. Rest of the day, my friends, we have say CPI, PPI is the other big data point today. Remember, we had that core for CPI that was cooler. The headline was what hotter out of the US. What's the producer price index going to look like? It's less market moving than the CPI, but it's significant because it's what producers are paying, and that eventually gets fed into what retailers, what consumers pay. So there is a feed in from PPI to CPI. That's why it's important. Let's have a look at the chat today. I thought there was some. No, it's only Mr. Barr. We had yesterday. We did have. One of the big critics of Michelle Bowman of not critics, but critic of Powell and wanting to move in July. She reiterated that again yesterday afternoon. Barker and Collins were also speaking yesterday. Bailey was speaking last night at the Mansion House. That's along with the UK Chancellor. Obviously, earnings season kicked off yesterday with the big banks. There's plenty more to come to feed through to the index trades, and you can see they've all sort of rolled over somewhat. So keep your eyes open for those more banking companies reporting today. And I will see you tomorrow. Is Thursday. What are we doing tomorrow? I've forgotten what's happening. What's the big event for tomorrow? European inflation tomorrow. Is that? No, it's not that. Oh, it's core retail sales tomorrow afternoon. That's right. Core retail sales, the Philly Fed, and obviously the weekly claims. It's Thursday. I forgot. Silly boy. So quite a big, you can see here, quite a big US data dump at 12:30 GMT, Universal Standard Time. So I'll see you again for that. So in the meantime, take care, be good. And as I always say, if you haven't got an account with us, why not? They're very, very competitive. You've got the whole host of support. Our team is growing all the time. Our favorite challenges from our clients happens to be the standard challenge. 25,000 still remains the most popular, interestingly. I thought some of the buying cheaper ones, but it's not the case. So if you're on Discord and you've already had an account with us, try Discord 20, and that will get you a 20% discount off any of the accounts. So 25,000 comes in at $140, 50,000 at $275, 10,000 less than $70, $68 with a Discord discount. If you're brand new, you've never used us before, or you've never had the proptrade.com account before, if you're new, 25 on your unique email address, you get your 25% discount. So a $10,000 account comes in at a little over $60. So come and give it a go, and we're here to help you. Okay, follow the rules, and real cash can be yours. 80% of the winnings you make on your funded account pay to you in crypto every Friday after you've made your first funded successful account. Okay, take care. See you all tomorrow for the that data dump from the United States. All the best, everyone. Bye bye.